Sean Hagerty, you're managing director of Vanguard Europe. We had a rally, we've been having a rally in stocks markets since the beginning of January. Probably could be the best start of the year in stocks since 1987. Will it go on like this or will it pausing?
Well, the last thing we'll ever do is predict short-term market movements at Vanguard. What we really believe in is long-term buy and hold investing, where you know that it's very difficult to predict the short-term gyrations of the market. Who would have predicted the downturn in the fourth quarter of last year or the recovery in the first part of this year? What are the Federal Reserve and central bankers going to do, and how is that going to impact, and what are the global economic signals that are going to impact the central banks? Those are all things that are very hard to predict in advance. And therefore, our advice to investors is always to just stay the course, buy, hold, rebalance periodically, change your asset allocation if your risk tolerance changes or if your actual life circumstances change. Otherwise, honestly, maybe it'll go on, maybe it won't. It won't matter for a long-term investor.
Having a look at the statistics of ETF flows and investing and investings in January, it was striking that investors didn't favor shares. This is not very surprising, having a look at the December, horror crash. What movements do you see now in the ETF markets? What shifts of investors?
I would say last year was a year where you saw cash flows into risky assets decreased compared to prior years. And so there is a little bit less risk being taken on a net basis. But what's important is, although we look at things in terms of incremental change, and we know that at the margin, investors oftentimes don't time things well, and that they do sell after a market has gone down and maybe buy after a market has gone up. That's still at the margin. What I think is more important is to understand that well over 90% of the assets stayed exactly where they were in the first place. And so the fact is that although you saw somewhat lower cash flow last year, and you have not seen that recover yet, at least we have not seen that really start to recover yet, the bigger story is that most of the money that was in the markets and risky assets stayed there. Most of the money did.
Investor legend Jack Bogle died recently. He founded Vanguard. What happened at the company when you learned that news?
Well, Jack Bogle is a legend at Vanguard, and as our founder, I think it was just a somber moment, and a moment for us to stop and pause and reflect on him and what he's done for us as individuals and what he's done for investors everywhere. And so for us, the past few weeks have been one to honor his memory and to reinforce that we have a legacy to uphold in terms of how do we treat investors fairly and how do we work tirelessly to improve outcomes for everyday investors, which is what he would want.
Vanguard has a mutual structure. What does that mean for investors?
Well, Vanguard was, and this is, I think, Jack Bogle's most significant innovation, was that he founded an investment management company where the investment management company is owned by the clients. And that makes our interest perfectly aligned, and therefore we can run the portfolios at a very low price point, and all the decisions we make, literally thousands of decisions every single day. We don't have to think about how do we maximize return for the people who own the management company, whether that be a family or whether it be publicly traded. We just think about how can we maximize the return for our clients. And we think that makes us fundamentally different than anybody else in the industry.
So do you plan new products for the rest of the year in Europe?
Yes, we have a pretty robust product plan because we're still relatively new in Europe, and so we still have things that we'd want to do. We just launched multiple share classes of some of our existing ETFs just within the past few weeks, and I think you'll see more from us on both the equity and the fixed income side in ETFs in particular.